Welcome to the Deep Dive, your shortcut to the heart of the latest earnings calls. Today, we're ripping open the Q2 2025 results for Bitdeer Technologies, Nasdaq Q ticker BTDR.
Yeah, Bitdeer, they've really been, making some waves. They're trying hard not to be just another crypto miner.
Definitely. Yeah. Positioning themselves more as a digital infrastructure company.
Exactly. And this Q2 call, it laid out a really fascinating picture. You've got this strong top-line growth, but also some pretty deliberate strategic shifts.
And the market noticed, right? Big positive reaction.
Oh, yeah. So for you listening, we're going to unpack what drove these numbers, but maybe more importantly, what management is trying to signal about where they're headed.
It's like watching a transformation happen in, almost real time. High stakes stuff. Okay, let's hit those headlines first. Q2 2025 revenue, $155.6 million.
Which wasn't just a beat, it kind of crushed the consensus estimates.
Yeah, up something like 57% year over year, and a staggering 122% jump from Q1. Just massive.
Huge jump.
But here's the twist. Despite that top-line strength, the GAAP EPS came in negative. -$0.76. That actually missed what analysts were expecting.
Right, so big revenue win, but a miss on the bottom line, technically speaking. But that headline GAAP miss, it's interesting, isn't it? Because the market reaction tells you something else.
What do you mean?
Well, investors pushed the stock up quite a bit. That suggests they're, looking past that GAAP number.
They're seeing something else.
Exactly. They understand that sometimes, especially when you've got things like convertible notes involved, the main accounting number doesn't capture the whole operational picture. They're betting on the future potential, the strategy.
That makes sense. It's about the underlying story, not just the accounting noise. Okay, so digging a bit deeper then. Gross profit, $12.8 million.
Now, that was down year over year, but importantly, way up from a negative Q1. Material improvement sequentially.
Right. And Adjusted EBITDA, which often gives you a cleaner operational view?
Yeah, that came in at $17.3 million. A really significant swing back into positive territory compared to Q1's loss. Still down year over year, mind you, but the sequential trend is strong.
So signs of operational momentum improving even with that GAAP loss hanging there.
And the market absolutely saw that. The stock jumped, about 7.2% the day after the call, after a pre-market pop too?
Yeah.
That's not just cautious optimism, I think. It signals real belief in the company's direction, valuing that revenue growth and the strategic plays over the accounting loss. It's a long game focus.
Okay, so that's the snapshot. Let's really get into the details now. That huge revenue growth. Where did it actually come from?
Well, it was driven mainly by two things. First, their own mining operations, self-mining, brought in about $59.3 million.
Solid. Okay.
This is maybe even more telling. Really strong external sales of their own mining rigs, the Seal Miner A2. That generated $69.5 million.
So they're not just mining, they're selling the tech to do the mining. They're an innovator, a hardware provider.
Exactly. And that combination is potent. Self-mining shows their infrastructure works, but selling the ASICs shows they have core tech expertise. It gives them flexibility, multiple income streams.
That's a really critical distinction.
Yeah.
Okay, let's tackle that big JAP net loss number head on. Negative $147.5 million. It looks scary.
It does, if you don't look closer.
So what's the deal? You mentioned non-cash charges.
Right. The vast majority of that loss, like $438 million of it, was from non-cash derivative losses. And these are tied to their convertible senior notes.
Okay, break that down for us. Why isn't that as bad as it sounds on paper, especially for maybe U.S. investors not used to IFRS?
Absolutely. This is super important. Essentially, this paper liability went up because Bitdeer's stock price went up.
Wait, the liability increased because the stock did well.
Yeah, counterintuitive, right?
Yeah.
But under IFRS rules, which Bitdeer follows, these convertible notes have to be revalued based on the stock price. If the stock rises, the potential cost of converting those notes into shares, theoretically, goes up, so the liability on the books increases. It's a technical accounting adjustment. It's different from U.S. GAAP in some ways. But the key thing for you to know is this doesn't touch their cash. It doesn't affect their liquidity or their ability to run the business day to day. It's a paper loss, not a real cash drain.
So paradoxically, a rising stock price created a bigger accounting loss in this specific case.
Exactly, which helps explain why the market could look past it. They understood it wasn't an operational issue.
Got it. And speaking of those notes, they also closed a big offering in June, right? $375 million in convertible senior notes.
Yep, 4.875% interest. That initially caused a bit of dip in the stock, probably on dilution concerns.
Sure, standard reaction.
But ultimately, it really beefs up their balance sheet. They ended Q2 with almost $300 million in cash and equivalents, plus another, $169 million in crypto?
So plenty of dry powder to fund all this growth and strategic investment we're talking about.
Which brings us right to those investments, especially in designing and making their own ASICs. That vertical integration is key.
They're not just buying off-the-shelf chips.
No way. The SealMiner A2, as you said, drove those strong external sales in Q2.
Yeah.
But they're already moving on. The SealMiner A3 is almost ready for mass production.
Shipping in October, they said. Contributing to revenue next year, 2026.
Right. Having that control over their hardware, design, manufacturing. It's a huge competitive advantage. Better costs, better performance potentially.
And they're pushing even further with the next generation, the SealMiner A4. This sounds like a really big deal.
It could be. They're taking a dual-track approach in R&D. One design is aiming for something pretty groundbreaking, around 5 joules per terahash efficiency.
At the chip level.
Okay, 5 JTH. For listeners, just put that in context. Lower is better, right? Means less energy per computation.
Massively less energy. In an industry where energy is often the biggest operating cost, hitting that kind of target would be, well, game-changing. It could dramatically lower their own mining costs and give them a huge edge.
They mentioned new digital circuit architectures.
Yeah, and patents being filed. And here's the really interesting part. They think this A4 chip could have uses beyond Bitcoin mining. Like what?
High-performance computing die. Anything that needs a ton of compute power, but is also super energy intensive. They're even expanding their U.S. engineering team for this.
So this isn't just about being a better miner, it's about potentially becoming a foundational tech provider for AI and HPC.
That seems to be the ambition. That 5 JTH target, if they hit it, isn't just good for Bitcoin. It could shift the economics for a lot of energy-hungry computing tasks. This is where that whole digital infrastructure and silicon innovator narrative they're pushing really starts to make sense.
And you need places to put all this tech, right? Which ties into their infrastructure expansion.
Absolutely. They brought 361 megawatts of data center capacity online in Q2 alone. Norway, Bhutan, strategic locations.
And the target is huge. Over 1.6 gigawatts of total electrical capacity by year end.
It's incredibly ambitious. The rest of Norway and Bhutan capacity should come online in Q3. They need that scale for their own mining growth and definitely for any serious HPC AI plans.
Why Norway and Bhutan specifically?
Power. Cheap, abundant power, often renewable, like hydropower. That's the lifeblood for mining in HPC. It locks in lower operating costs and gives them geographic diversification.
Makes sense. And then there's Ohio, the Clarington site. That seems pivotal.
Oh, very much so. They signed a letter of agreement for the full 570 megawatts there.
And the timing was critical, wasn't it?
Absolutely crucial. They secured that deal before Ohio changed regulations in a way that would have made power significantly more expensive.
So they basically locked in a long-term cost advantage? Foresight or just good timing?
Bit of both, maybe. But definitely strategic. It builds a kind of moat around their plans for that site, de-risking the expansion before costs could jump. That's smart planning.
And Clarington is specifically tagged for HPC and AI, right?
Explicitly. They're already in advanced talks with a partner for project-level financing.
Okay, so with all this new capacity coming online and these new chips, how are they deciding where to put the ASICs they produce? Sell them externally, like the A2s, or use them internally?
Good question. Right now, the focus seems to be prioritizing their own chips for their own self-mining operations.
Why is that? If the A2 sales were so strong.
Margins, basically.
Yeah.
At the moment, the profit margins on self-mining are very attractive. So it makes sense financially to use their best, most efficient chips internally first to maximize those returns while they fill up all this new data center space.
But long term?
Long term, the goal is definitely to be a major ASIC vendor to the whole market. That's clear. So expect a shift maybe once their own capacity is saturated or if market dynamics change. It's about optimizing now while building for future market share as a silicon provider.
And that self-mining capacity is growing fast. They're targeting 40 exahashes per second by the end of October this year.
And they even think they might beat that by year end, thanks to getting better access to wafer supplies. They were already at 22.3 EHs by the end of July. So they're moving quickly.
Which also connects to how they manage their Bitcoin holdings, I suppose.
Yeah, they seem to have a balanced approach. They sell some Bitcoin, presumably to cover US dollar costs and liabilities, but they also hold a good chunk.
Because they're bullish long term.
Very bullish, apparently. The chairman and CEO, Jian Wu, actually predicted on the call that Bitcoin could hit $1 million.
Wow. $1 million. In how long?
8 years, he said. That's quite a statement of conviction in the asset's future value.
That's not just bullish, that's almost a generational bet.
Okay, let's pull back a bit and frame this for investors. Market sentiment seems positive overall.
Yeah, definitely. That post-earnings stock move reflects confidence, I think. Confidence in the revenue growth, the vertical integration with ASICs, and crucially, those diversification moves into HPC and AI despite the JEP loss.
They're buying the story.
They seem to be buying the evolving story. Bitdeer is actively trying to reshape its narrative, away from just crypto miner towards this digital infrastructure and silicon innovator identity.
And that's not just marketing fluff. I don't think so. It emphasizes their scale, their focus on efficiency with chips like the A4 and the diversification. It's setting expectations for how they want you, the investor, to value them long term. It's where the potential upside really lies.
So for you listening, what's the takeaway? The industry is still cyclical, obviously, tied to Bitcoin prices, energy costs. That hasn't changed.
Right, but Bitdeer's trying to differentiate itself through that ASIC integration, the massive data center scale, and those strategic moves like locking in the Clarington power deal early.
And while they didn't give specific financial guidance numbers?
No, but the tone was clear. Management expects things to improve sequentially, driven mostly by that ramp up in self-mining hash rate and the new data centers coming online soon.
Okay, now let's switch gears for our not financial advice segment. And we really have to stress this. What follows is purely for informational and entertainment purposes. It is absolutely not financial advice. Investing carries risk. Always do your own homework.
Definitely. Okay, so disclaimer firmly in place. Given everything we've discussed, that aggressive push with the SealMiner A4 targeting breakthrough efficiency and those broader HPC AI uses, plus the strategic Clarington site. Here's a thought.
Speculative one, I assume.
Highly speculative, long-term. Consider something like a multi-year, deep-in-the-money call option on BTDR, or maybe a long-dated call spread. We're talking options expiring maybe 2-3 years out.
So a leverage bet on significant appreciation over the medium to long term. Why that structure?
Because it's a way to play that narrative shift. You're betting that the market eventually fully prices in the potential of the A4 beyond just Bitcoin mining and the success of the Clarington HPC AI pivot.
You're betting on them becoming that digital infrastructure and silicon innovator they're talking about.
Exactly. Capitalizing on that R&D and diversification potential maybe before it fully shows up in the quarterly earnings reports. As soon as they execute well on the A4, land those HPC partnerships, and turn today's investments into real future cash flow.
And it aligns with that very bold long-term vision from Jihan Wu and the company's whole transformation story.
Right. But again, it's a bet on successful execution. High risk, potentially high reward, definitely not for everyone.
Understood. Okay, so let's recap. Bitdeer's Q2 call really painted a picture of a company in motion. Strong revenue from current operations, both mining and selling hardware.
While simultaneously making these huge strategic bets on next-gen tech like the SealMiner A4 and pivoting hard into the HPC AI space with major infrastructure plays like Clarington.
It's a fascinating balancing act.
It really is. And the big question hanging over it all for investors is pretty clear.
Which is?
Can they actually translate all these ambitious investments, the infrastructure, the R&D, the silicon innovation into sustainable profits and real long-term shareholder value? Can they truly cement this new identity?
Or does the focus maybe stay too tied to those, let's say, very optimistic Bitcoin price predictions, overshadowing the hard tech and infrastructure work needed?
That's the tension, isn't it? Something for you to definitely think about.
Indeed. Well, that's all the time we have for this deep dive. Thanks for joining us. We encourage you to stay curious, keep digging, and continue your own research into this rapidly changing digital landscape.